Hello everyone, welcome to the Ichimoku.co daily futures market review for the trading day ending Monday, August 4th. To NYMEX oil, and here we've seen a change of trend today, and importantly, following these two very large bearish black body candles with the sellers strongly in control, we then saw the indecisive spinning top type candle with the market testing below the $98 level. On that spinning top, the buyers lost commitment around 98, but today the buyers have been strong enough to close in a strongly bullish manner up above there. It does suggest that there is potential for the market to trade higher, but we do need to watch this previous swing low, and this area was tested back in early May, and it is a potential area of resistance around the $99 level. If the buyers are strong enough to trade through there, then we should find strong resistance at the round number 100. We have the Tenkan trading around that area as well. But we have a bearish market in all three times here, in all three time frames, trading below the cloud, the Kijun-sen, the Tenkan-sen, and the Chikou span is below the corresponding price action. So a likely scenario here is that with the buyers coming back in here, following these two very, very large down black body days with the seller strongly in control, we're likely to see the market perhaps even retrace further to 99 or around 100, and then for the sellers to come back into the market. Now if the sellers can come back in and close down below 98 and below this swing low, which is roughly very close to the 97 level, we could quickly see the market trading down to around this 94.63 level of previous support. We don't have any strong support or resistance based on previous peaks or troughs until the market trades down to that area. So there is a good opportunity here for the sellers to come in. Moving next to wheat, and here we see further consolidation of this market within this range between 516.50 and the 557.50 level of previous support and resistance. Today the buyers have come into the market, and importantly a little bit of follow through following the bullish breakout above the Tenkan-sen indicator, indicating that we have had a change of sentiment in that fast term time frame, but we still have the market trading below the Ichimoku cloud and the Kijun-sen. So some very important trading activity coming up over the next couple of days. Now if we look at this candle, we have seen a large shadow appear on the top of the candle, and the market closed just above the midpoint level, so it suggests that the upside momentum in net terms is certainly with the buyers, and they've increased that amount of momentum, so that's a positive for the buyers. But they've only just closed with control by closing just above the midpoint level, and they lost commitment as evidenced by this shadow up near this 557.50 level, and obviously the influence of that is exerting itself, and with the Kijun-sen trading around there, it creates a very strong area of important resistance for this market. So there is an opportunity here for the sellers to come into the market. There isn't any indication of that yet. We're not seeing any strength from the sellers. But what we have seen for the last two candles is the Tenkan-sen hold a support. That's trading at 535.88, and we have a market that's bound by close by support there and close by resistance around the 557 level, and at the Kijun-sen trading at 555. So an important couple of trading days coming up for this market. If we see a strong bearish breakout down below the Tenkan-sen and the market tests below 526 and 516.50 in a bearish manner, we could quickly see it testing down to the 500 level. Now this retracement that we're getting in wheat really has a lot to do with the lack of downside momentum that we saw in the market. So as we were watching the market develop to the downside, all looked very well on the candlestick charts, and the Ichimoku indicators were telling us that the market was bearish in all three time frames. But if we look at the MACD histogram, we had these three divergences as the market was trading lower. So as the market was making lower troughs and the trend looked healthy to the downside, momentum was not as strong on each of those troughs as we've seen previously, and it suggested that all was not well with the market, even though it was looking healthy to the downside on the candlestick charts. Here we've seen this third divergence at that last trough, and the market trading up substantially, so a lot depends on whether we can see any decent follow through. Now we have seen these previous divergences here, but triple divergences tend to be quite strong, and a lot depends on whether we can take out the area around the Kijun-sen indicator, and that certainly would herald a very significant change in sentiment. Moving next